All right. Mike Lindstrom here, coming in from Phoenix, Arizona, where it is 80 degrees in February. Yes, Super Bowl week. I'm really excited to have my really good friend Paul Clark on from Clark and Lavey. Little quick background on Paul, let him introduce himself, but also want to explain why I'm doing this. You know, as many of you know, I've been working in this industry for 21 years. Started off working with on the carrier side. Guardian Life Insurance was one of my first clients, and it turned into big brokerage firms and then independents. I've been training and speaking with BAN, and UBA. They have combined over 300 brokers around the United States. And that's actually how Paul and I met. We're coming up on our 5th year together. We've shared stages together. We've consulted together, have fun, of course. But it was really, yeah, the stuff for later time. The thing that was really fascinating to me when I started working with Paul, I had worked with so many brokers for over the years, and everybody kind of has like a niche, you know, whether it's the trucking industry or the oil industry. I have some friends in Texas. But there was a model that he's going to talk about today, literally his strategy for business that I thought was fascinating. And he and I literally were talking about this on a stage in front of other brokers about 4 years ago. And to watch the audience just go, wow, this is something I need to learn more about. And I'm a big fan of that. My friends out there, my broker friends, my entrepreneur friends know that when I do these kind of Zooms or meetings, I like to bring on my friends. I like to bring on professionals that are doing unique things. Like last year, I had Dr. David Dahimi talking about how to bolster your immune system. I had a CPA talking about PPP programs last year for relevant topics. So I want to bring on Paul today to talk about this, because we talk about this word captive in the insurance world. It gets thrown around so much, like everyone should just know what it is. And when you hear more about Paul's model, of course, it's going to get your attention. And that's the point, is we can work with you or partner with you or help educate you on the model. So before I get any more into this, Paul, we got to hear from you. So Paul, tell us a little bit about yourself, the firm, before I get into some of these questions.
No problem, Mike. Well, first off, I just wanted to say it's the first time I've ever been interviewed where the guest speaker rubs it in my face that it's 80 degrees in the sun when it's 20 degrees and we just got 18 inches of snow last night. So thank you for that brief reminder of how wonderful New Hampshire and the Northeast is, Mike. I really do.
Got it, brother.
Next time you can come out and help me snowball a little bit, okay?
Love it. Love it.
So I appreciate the opportunity, Mike, and as you said, we try to be different here at Clark and Lavey. And you mentioned a couple of quick things. We met at BAN. How I ended up connecting with you and then never shaking you loose, I don't know, but no, obviously I'm teasing. But so Clark and Lavey is a firm that we were about the 10th firm that joined BAN, Benefits Advisors Network. And the guiding principle of BAN was that we all joined together to try to bring or aggregate products and solutions for our clients. There are a number of other groups out there. I won't name them just because I don't want to speak ill. But they really got together to provide stuff to the brokers, whether it be agency management systems or how to find personnel, et cetera, et cetera. And one of the striking differences that really attracted myself and Clark and Lavey to was the fact that we were really banding together to provide better solutions and services for clients. And that really sums up not only Clark and Lavey, but our time in BAN. We're constantly trying to find solutions in the marketplace that aren't just 1 year, 2 year, 3 year solutions, and then they go away. And, in that respect, this is really where we've got to in the healthcare captive marketplace. It has been just a rocket ride since we really bought in. We were sitting at a BAN meeting and getting an overview from a couple of different actuaries. And, the light really went off in my head, similar to the way it did when we really invested in health reimbursement arrangements before anyone even knew what they were. The short version of Clark and Lavey, the services, and even the healthcare captive is, it's a different self-funding solution that really takes some of the ills out of self-funding. Because a lot of times what you find is someone will come to you and say, well, you're interested in self-funding, you can save a lot of money. And all these negative thoughts start going, wow, what happens if we're too small? We have a couple of high-cost claimants, we'll get killed. And the solution really is, and I'm not being technically correct, but I'm trying to make it as short and sweet as I can. A captive is like joining an association. And when you join an association, you spread the risk out amongst the members. So to very much of a degree, that is really what a healthcare captive is. We have two pools, the January pool and the July pool. The January pool is now 50,000 lives strong. The July pool is 20,000 lives. And the reason I bring up those numbers to illustrate in that, Captive 101 is if you join the January pool, you're no longer rated as a 100 life or a 200 life group. You're being rated in 3/4 of the aspects of the larger pool. I always use the analogy, everyone kind of teases me, but I use the analogy of buying pens. If I'm going to go out, I'm going to buy 1,000 pens. The unit price per pen is going to be a lot more expensive than if I'm buying 50,000. It's the same concept, but it's really banding together to bring down the cost for all. And there are numerous elements here, but that's really the 101. And I think that really kind of solidifies or really gives you a good overview of what Clark and Lavey is about. We're constantly looking for new solutions that have teeth to them, that have merit, and are not just fly-by-night type of solutions. And the healthcare captive has basically, it's been the best business decision I've ever made in my career.
That's great. Well, I appreciate that. I think there's some people out there that may see this. It could be someone in human resources. It could be a VP of sales that sees our video, says, yeah, I've heard of it, but I don't really know what it is. So the way that you explain it, I think and I've seen you do this in front of groups on stages. It is that simple. But here's the $1 million question. When I heard you talking, we had 100+ brokers when you were doing this presentation a couple of years ago. And I'm in the audience, so I get to watch people's reaction, and they get to see the Q&A and how you're engaging. And these are brokers, these are principals, these are business people, sharp people. There's almost like this feeling, Paul, of, well, okay, you made it sound so simple. Well, why aren't more people doing this? Like, what's the catch? I mean, maybe you can explain that, because I thought that was fascinating to hear your compadres out there asking these kind of questions. I mean, it's a good question.
You mean this was after they were throwing the tomatoes and eggs?
Yeah.
Just making sure we were straight. So, yeah, I mean, it's funny, Mike, because like any type of solution, any solution that's worth its weight, there are always potential roadblocks, and it really depends on the prism that you're looking at it from. What I've found is some of the big national consulting houses, the ones that have the big, as we call them, the ABC names, they don't like captives because it eliminates their profits at the end of the year, i.e. the bonus monies they receive for being good brokers, which is another way of saying that they get extra money for placing business in the right places where they should be in the first place. So, if you're looking at it in that prism, there are roadblocks to brokers. The other roadblocks to brokers can be, I've got to be, completely upfront. There are a tremendous amount of aspects, and I've used this analogy before. If I'm selling a premium case, there are maybe 15, 20 aspects, from paperwork to knowing the different rules and regulations and laws that really fold into it, that you as a good consultant / broker, notice I said consultant broker, need to apply. In a captive scenario, there are closer to 35. And they're really, it's not like, okay, 1 through 5 is really meaningless. All 35 are very meaningful. You have to understand the timeframes, the understand of a client joining this, and it's what we call a participation agreement, because the client is becoming part owner of this group. And owner might be a strong word, because technically each client is underwritten on their claims experience for what their claims exposure is going to be, but they band together for the majority of the fixed costs, as well as many other advantages. But so there are a number of elements that, again, you say self-funding, people immediately kind of have a pushback reaction. And, the best thing that I can say is what I said earlier. It's like the pens analogy. So if I'm a company of 100 lives and I self-fund, well, it's not really much different than me being in a premium side. When I'm fully insured of the premium market, if I have a horrible claims year, I'm going to get a very high increase next year. No question about it. In a captive, that risk is spread amongst the entirety of the captive. Hence my analogy of it's almost like joining an association. When you join an association, you're banding together to bring the rates down for everyone. Hopefully, it's a short and sweet answer.
Yeah, that's great. Well, one of the things, I've been on a few of these presentations where you've actually presented the model to brokers that are interested in learning more and potentially partnering with yourself or Clark and Lavey. I think it's interesting how much work behind the scenes, to your point, has had to be done to get to this point. This is not easy. You can say, hey, I can show you how to do it, but you have to do, like you said, there's paperwork, there's training, there's resources, time, capital management, all those things that go with it. So if somebody out there is watching this and says, hey, this is something that's just interesting to me, I want to align myself with Clark and Lavey, is it really like a plug and play? I mean, give us a visual of what's going on behind the scenes, because I've seen it and I'm impressed by what you've been able to put together. Can you give us an idea of that?
Yeah, and that's and you're right, Mike. I mean, the backroom support is huge, and I guess I'll kind of backtrack a little bit. So when we first got into this, it was trial by fire. I mean, we were learning the hard way, learning all the lessons. It took us a good 5 to 6 years to really learn these 35 elements. We didn't even know the 35 elements. We were listening to the captive managers, and they're telling us, okay, there's 1 through 15. And as we started getting in and being a different type of consultant broker, where we're really trying to make sure we're making it the plug and play, or as we call it, the turnkey solution, it really became apparent that it needed someone like us to be able to turn to the action and say, okay, guys, wait a minute, we get this part, but what you're forgetting are the human resource elements. How does this affect the level of job responsibility that human resources has and financing has? What are the differences between the benefit programs? How is it communicated differently? Do we tell people they're in a captive, or do we say, look, these are your benefit programs? So there really were a tremendous amount of elements that we had to bring together into this turnkey solution. And for brokers and consultants out there, what we've really done, because I know there are other captives out there. The problem is they come in and say, oh yeah, we have a captive for you. We'll give you the numbers, but then you have to go get the actuaries, or you have to go and figure out your legal aspects, and you have to file all the paperwork with the government. Okay, wait a minute. After the 10th thing, I'm saying, this is too much. So what we really done, and to your credit, Mike, with your help, we have our annual management retreat. You come in for it. And, we really try to rehash, okay, what did we do right? What did we do wrong? Some people call it a SWOT analysis, call it whatever you want, but it's basically a SWOT in different terms, all right? And what we really realized that if we're not providing a turnkey solution, and what that means is having the backroom support from the broker, knowing all the renewals, knowing all the processes, knowing the timeframes, knowing how to get the deliverables to the client, knowing how to put the materials in the proposals, what materials, so that the liabilities for any brokerage firm are resolved. And quite frankly, knowing what contracts and things the client needs to see up front so they can truly evaluate this. Now that goes for every portion of the whole captive turnkey solution. So we're talking the actuarial piece, the third-party administration, i.e. the medical networks that you're renting, and you rent each and every state. We have national networks, local networks, but there's a tremendous amount of activity that goes with that, because one of the other scary points of a group self-funding is the sharp ones say, well, geez, one of the first things I have to worry about is now I'm the fiduciary, I'm responsible. Yes, you are. Now, I'll be quite honest. It took us 2 years to figure that one out. And then all of our contracts now, every TPA we work with, they accept the fiduciary responsibility on the client's behalf. Huge, huge element, okay? So you've got the TPA, the medical plan, the delivery system, ID cards, the PBM, the prescription benefit management program, the wellness program. Putting all of those people and all of those solutions together so that it literally is, as you said, plug and play, I'll be straightforward. It was not easy, but call it my Marine Corps background or my anal retentiveness. I take both complimentary, so I don't care. It really was making a list of, okay, here are the things that worked well. Here are the things that didn't, that we need to either eliminate or change. Okay, great. Now we have this list of 100 things. Now, how do we bring it together? And as an example of one of those things, when, as you know, we have been getting a tremendous amount of former competitors, local competitors, national competitors, BAN and the LARA members calling me and saying, hey, we want to sub-license your in-cap product. What we also realized was it wasn't just about training the client. Yes, that's extremely important, and there are a number of elements there. But it was also about training the brokers and the consultants and their staff. Hey, folks, if you want to do this, here are the 5 or 6 line items that you want to give to the client, the prospective client, up front, so that they're starting to be able to dig in a little bit and say, okay, all right, I've seen that. I've looked at that on the web, and I've seen some CFOs comment on this element. I've seen some human resource folks comment on that. And it was really putting all of those elements together and, quite frankly, making it work. Because at first, oh, this is great. We're going to put it all together. This is great. Wait a minute. The wheel wasn't quite round at that point. It was more like a Flintstone wheel. We had to shave off some edges, but we really have it down to a science now. And, I can look any brokerage firm, consulting firm in the eye and say, look, I can cut out 5 to 7 years of your learning. We've built a fantastic solution, enough that literally my competitors, I just got a call yesterday of one of my competitors 10 minutes up the road from me saying, hey, we've been competitors all the time, but now we're part of Valera. Can we sell your product? I said, let's have a discussion. Let's set up a Zoom meeting, okay? I don't want to go on too much, but it was really putting all of those pieces and all of the contractual elements within those pieces. I mean, as one example, when you have a third-party administrator, you sign up that group. All right, we're going to use the X network. Well, that one entity probably has 10 to 12 pieces of paperwork, contractual paperwork, to get the benefits up and running properly. Well, now take that and multiply that times the PBM, times the rounds, the actuary, the wellness, the health plan, the broker to client contract, the client, it starts to become, just huge. We've developed a whole solution for client and consultant broker with even training manuals. And I've told some of the people who come in, look, we've transitioned. Basically, we're acting as a general agent. I'm no longer trying to compete against, XYZ company, at least in the in-cap space, okay, the captive space. When they decide to come on board, basically working for them, I'm acting like a sales manager for them to be able to properly sell the accounts. And I attend the pre-meetings, i.e. the proposal meetings, the sale meetings. I've been on board meetings with prospective clients and my co-brokers. And it really has transitioned us from being just, broker consultant to we're operating much more in the general agent space. And I want to be upfront. We're not a general agent. We don't need to be in this space because we're really, I'll call it an expert consultant. How's that?
Yep. Yeah, no, absolutely. Well, hey, by the way, you mentioned real quick, your military background. When I first met you, Paul, you said, hey, I really want, he said, give me your address. And so I sent him my office address and I get this box. And my wife says, are you expecting anything from Clark and Lavey? And I said, I don't know. Paul's asked for my address. I open up this box and it's a binder. It's like a 4-inch binder, 3-ring binder. And we had our next call, a session together. And he said, I want you to see how we operate. And I couldn't believe the detail. I mean, the detail of and this was just like in everyday matter of course. This wasn't even a captive situation. This was like how they interact with clients. And I remember I held it up my wife. She's an attorney and she's very detailed like Paul, unlike me. She's like, wow, this guy, I'm an anal retentive, man. He's got it all covered right there in that binder. So that's no joke. And I still have the binder, by the way. I was rearranging my office last week and I still have it. So that I want everybody to know that when you mentioned that, it's an important quality about you as a leader and as a partner. So I think that's good to highlight.
Thank
you
you.
talk on this real quick? Because I thought when we were doing our kind of our pre-meeting, this title that you came up with, I think it's really interesting. Can you talk about the title? You know, we're talking about rolling back, moving forward. Explain what that is, so it kind of captures the essence of, you know, how this came about.
Yeah, no, that's funny. And I obviously I need to be a little careful here, but
Sure.
and this is more so for my consultant broker friends of all levels who will understand what I mean very, very quickly. You know, I, like many others who probably be listening to this, have served on 5, 6, 7 different broker advisory boards for the national carriers and the local carriers. And it's nice to be on those boards, and you get exposed to things that you wouldn't normally if you weren't participating and kind of giving and getting advice. But the one conclusion that I have come up with in the past 20 years is, and this isn't meant to be a dig, it's going to sound a little bit like that, but I don't know, maybe it is. The one thing that I've learned in 20 years of being involved in this is the carriers have no loyalty. We are the ones that are out doing all the hard work. Excuse me. We're out there digging up the clients, we're prospecting, we're doing all the sales and marketing, we're spending all the money. And over the past 20 years, the trend has really been that the carriers cut commissions, which to a degree I'm not disfavorable of that, because I think there were many examples where people were being too fat and they were really overly gorging themselves on this commission garbage. But the long and the short was the carriers were cutting back, the carriers were pushing more and more onto us, and at the drop of a dime, someone comes in, a new HR person comes in, and typically what happens, well, I've got a long-term relationship with this person, so I'm firing you and bringing them in, and immediately commissions stop. Okay, now wait a minute. We go back 10, 15 years ago. When you brought a brand new case to a carrier, they would guarantee, and they made the client sign off on it, that the commissions for that case, at least for the first year, in some cases 2 years, depending on the product, would be guaranteed to the writing producer. So in having many conversations with some of our counterparts, when we were able to finally craft this total in-cap rollback move forward solution, one of the conditions that I went to all of our partners, and notice the word I'm using, partners, not vendors, there are partners. I said, guys, look, we have to solve something for our agency owners and people who are running their different shops. One of the things that I want each partner to guarantee is that the writing producer will maintain commissions for the life of the case. No letters of authorization, no broker or records, no transfers, nothing, no way of sneaking out of it. The one thing that really has, I believe, brought problems to the agency system out there is the fact that this churning in the industry. You go out, you kill yourself, do all this work, put in a case, 3 months later, HR position change or CFO changes, you're fired, you were banking and budgeting on 12 months and now it's gone. When an agency joins InCap, any piece of business that they write with us is guaranteed for life, for the life of that case. And not only do we say this to the consultant, broker, we make the client understand this by walking them through the contract and upfront saying, look, this is, InCap is a trademark product. There are other products out there. We might not be the right one for you. But if you join this, here are all the benefits that we're bringing to the table. And oh, by the way, we have a lot more than all of them out there. I'm positive of that. I specifically did that on purpose. And it wasn't easy. But we want you to understand, here are all the positives, but also, Mr. and Mrs. Client, here are your obligations. It's kind of the old contract law. Promise to let it has to be mutually beneficial. The people that are finding you the solutions need to be able to reap the rewards, remuneration. And one thing you'll note too, Mike, we don't call them commissions because they're not commissions. We're working on a fee-for-service basis. And I can talk about much more in depth than a 201 or 301. I don't want to get too much into the weeds in that, but 2-second version is one of the things that most firms don't realize When you're on a broker contract, if you're providing any additional services, you're paying for Cobra, you're paying for HR services, you're paying for these. Depending upon the state you operate in, you're violating the law on what they call rebating. You have a nonprofit as a client on a premium basis, you give them a $10,000 check, Mrs. Agency owner, you could be brought up for rebating charges. Now, does it happen often? No, all right, but it's there. As a consultant on a fee for service, you pay for anything you want because you're a consultant and you're on a fee for service basis. So that's another element that really kind of ties into this. But the rollback move forward was roll back the tide on the carriers who are giving us absolutely, no credence for all the hard work we do, and move forward without them. If they want to join, great. If they don't, we already have the players to take their business.
I love it. I love it. I love it. Hey, we have some visual people out there, learners like myself. So I'm going to do a quick share screen if you don't mind, Paul. I thought this was interesting to highlight. There's a couple, just two slides real quick. If you don't mind, I know people can read this on their own. They can certainly email us if they want to get the full copy of it. But can you highlight a couple things? This is basically the elements, and we talk about what's going on behind the scenes to create plug and play. Can you highlight a few of these you think are real important for somebody who's considering this kind of a relationship?
Yeah, absolutely. And what I would say here, Mike, is number 1 and 2, sign contracts, no BORs, always. We really just talked about that, but I cannot tell you how important we have actually seen this be. I've had people call me out of the blue and say, wait a minute, I heard this. I know this is BS. You can't really mean that. Yes, I do. And we put it in writing to you in a formal contract. Okay. So 1 and 2 are pretty much explained. Again, the number 3 is also kind of explained, the fee for service versus broker consultant. There are a lot of other elements to that, but I really believe that one of the other elements of this captive that makes it work is client engagement in much more of a consultant relationship versus broker relationship. One of the requirements that the clients have to be aware of is we're going to be getting all the claims data, we get it monthly, but we mandate if you want to join INCAP that you meet with us quarterly so that we can review all of your data. It's de-identified. So we don't come in and say, Paul has this, Mike has this, Sheila has this, and Sherry has that. We basically, claimant A, B, C. And in addition to just reviewing claims, because all my consultant friends, we have Verisk, Deerwalker, name the 30 other programs that really kind of do data analytics. Our chief financial officer, Laura Bennett, who is a whiz with numbers, trust me. Myself, Laura, and each of our partners really boiled down the reporting elements. And what I'm trying to say in a very polite manner is we cut out all the garbage. These things, you look at one report and it has 60 different line items. Okay, if I'm a company of 25,000 lives, then maybe all 60 have relevance. But for the majority of the companies out there, it really is only about 20 or 30 line items that have relevance. Some will have it this time, next at that time. We have customized reporting that delivers specific and particularly, we developed it. And I'll give you an example. A lot of the times you'll hear some particular clients say, well, geez, we really would like to have benchmarking. Perfect. We not only have benchmarking against the carrier's book of business, but we also have benchmarking against the INCAP client base. Oh, by the way, the INCAP client base is running 30% better, lower MLRs than 2 major national carriers. Okay, we're really proud of that. Yeah. We drilled down, we cut out the excess, and we said, these are the elements that someone can, and you'll hear this term probably more than you want to from me today, control the controllables. We want to control the controls. What are we doing to hold down specialty drugs? What are we doing to hold down people? And again, I know you're going to cringe because I'm going to use my favorite word in the world, patriots. But when we see that on Monday mornings, there's a very high incidence of ER room utilization, so they can get little chits to say, I couldn't make it into work Monday morning after a Patriots game, we might need to make some changes to the copay structure. All right. It's really culling out the fluff and getting to the meat and bones of it. As you can probably tell, I'm a cut it to the quick guy. I don't want to sit through and you prove to me by having these NASA reports. I say that all the time. Great, that looks like NASA. What does it do for me? I'm not in the stratosphere. I'm down here working on the shop floor, working with my union folks or my machine workers to try and help them, engage in healthier lifestyles, or at least, even if they're not going to do that, understand how to use the programs properly so they're not wasting money. So we have a whole, and again, another of my favorite words, everyone gives me grief about, a whole plethora of customized reporting structure that we have a hand, and we make sure all of our partners work together and they coordinate the reporting. So it's not, you're going to get one report here, one report here. It comes together in a quarterly meeting. The quarterly meeting is an hour, usually for the first 2 years, and it's up to the individual consultant brokerage firm. Usually for the first 2 years, I'm involved with those. And then they say, hey, Paul, we got it? No problem. Good. All right. Hey, the sooner you get it, the less I have to do. So, I mean,
that's great.
Just a little bit. It saves me a little time to go work with other people. But we really hold their hand. And not only, we break it down into 2 meetings. We have the first meeting with the carriers. So we go through all of the data, make sure everything's accurate. And then we have the client meeting. And I work with all of my co-brokers, co-broker partners for both until they tell me, hey, we've got it. So that's a really, really important one. Selling anywhere in the U.S., no issues.
Yep.
And I think the one of the other ones, up to the top right, you see hand-delivered profit share. So this is something else that we did very differently. And I've asked the different players. Part of a captive is you're all putting in money to bring the rates down, right? And the other screen you're going to show, actually pull up the other screen.
Speak to this one here. This is the second slide.
So what we do differently is there are many captives out there and they all claim, oh, we're going to have profit share, we're going to have profit share. And some do, so I'm not going to say that they don't. One of the differences between us and them is anytime a client gets a profit share, it is sent to the broker consultant for them to hand deliver. Now I know in the new world order of post-COVID, maybe it's not hand delivered, but I've got to tell you, this is the most recent profit share. It was a 16.2% profit share. Now I can guarantee that every year is going to be 16.2. We normally tell people expect between an 8 and a 10% profit share on the premiums they've paid in. All right. This year was 16.2. I will tell you that even though, and I won't mention the name, I did have a client this most recent time that had a $246,000 profit share check. I went in with mask and they met me.
I bet.
Now that's, it's a larger client, it's a 1,500 life group, all right? But, on our 200 life groups, 300 life groups, the profit shares were in the, 60,000, 70,000. And that's just the profit share from the captive side, the health side. We're not talking about the PBM or prescription benefit management side, which again, those rebates, you can call those rebates. And there's a technical reason by calling them profit share versus dividend on the healthcare side versus the rebates on the PBM side. But even the PBM checks come to us. They then go to the consultant broker for them to hand deliver. Because what we were trying to do is we realized early on that part of the problem we have in this whole industry, not just with captives, is it's extremely difficult for a consultant broker to show real value to clients. They think that, you come in, you deliver your renewal, you beat up the carrier, or as we always refer to it, the whack-a-mole game. Again, I dated myself there, but, whack-the-mole, bing, 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 bing. All right, we'll knock them down here. We're not playing whack-a-mole, all right? So we designed this process to be engaged with the client on a quarterly basis. And I will tell you, and I really do mean it, we've had certain scenarios where a couple hundred life group comes in and says, okay, well, we like all this stuff, but we're not going to meet quarterly. And I've looked right at them and said, okay, I understand we're not the right captive for you. I'm sorry, we can't allow you in. And they were stunned. They thought I was just giving them a sales pitch. I said, no, I'm sorry. We're looking for clients that want to engage, want to reduce their spend, help their employees, help the quality of their benefit plan. And I'll give you an example of this. The very first captive client that I put in about 10 years ago is still a captive client, and they haven't made one copay, one deductible, or one benefit change in 10 years.
Wow. That's amazing.
How many of us can say that?
Yeah, that's amazing. That's amazing.
So the profit share, the rebates, we've designed it. We really try to take a look at it from both angles. Client issues that needed to be addressed and service/consultant issue that needed to be addressed to bring that turnkey together.
I love it. I love it. We're gonna start wrapping up here. I like to say brevity is power. I think you've nailed it. The one thing that I wanted to make sure that we bring home is if somebody's watching this and interested in next steps, can you speak to what the process is moving forward if somebody's interested from here?
No, that's great, Mike. I love how you pre-framed that. Sorry, I love it.
I love it, man. I love it. I'll take it any day.
It's really easy. And we've gotten this down to a nice process as well. So we have a PowerPoint presentation. It's about 10 pages, okay? And we literally will walk you through. In fact, I have one later on this afternoon with a competitor, all right? So we walk them through. We say, okay, here's how it works. Here's what we're looking for. We're looking for partners. We're not looking for spreadsheeters or people who just want to go in and quote. I can tell you right off the bat, someone called, well, I'd like to get quotes first. Nope, sorry. What we're looking for is we're looking for people who believe that this process can work and they believe in the benefit of benefiting their client, but also benefiting themselves. It's a win-win proposition, okay? So we walk through the different elements and we get into a little bit more of the captive 101 than we are today. It's just, there's a lot to go through. And basically I wrap it up by saying, okay, in that sheet that you showed on the very first sheet, signed contracts, no BRs, that's a big part of it. It's explaining what I mean, because sometimes we've had people with very detailed questions. Well, tell me exactly what you have for reporting. Okay, I'll give you a list. I'll show you examples. But we walk them through that, and then I wrap it up with, I say, look, if you like what you've heard today, let's set up a secondary meeting. And what we'll do in that secondary meeting is I will send you a copy of the secondary broker contract where I put my money where my mouth is. I put everything in writing. I spell out everything I'm going to do for you. And it spells out everything you're going to do to be part of this solution. The best comment, and we were joking about this the other day, I would say the best comment that I ever had, and I won't mention names, but it was from a senior vice president of sales from a major corporation, a carrier organization. And he said to me, and this was going back about 10 years. He said, Paul, you know the difference that I see between you and most consultant brokers? He said, they're operating as insurance agents. You're operating as a business person who just happens to be in the insurance world. I take that as the highest compliment. Honestly, I know I've got competitors. Oh, he's really difficult. He's a stickler for contracts. Yep, yes, I am. Thank you. We're providing a valuable service. If I sell you 10 million widgets and you take delivery of those 10 million widgets, you have to pay. So I kind of chuckle about that. But I like to open Pandora's box up front. I'm going to walk you through how it is. We'll show you the training manual, show you what we'll do. I'll give you a full-blown, review of all the services we're going to provide, from the backroom services, the whole kit and caboodle. And then I turn to them and say, tell me what you think. You're either interested or you're not. If they're not, okay, I appreciate their time. And, and obviously I'm going to be very straightforward. We have had a couple who are trying to unravel or get our secret sauce. I'm not going to give you the secret sauce in the second meeting. Once you sign the contract, I will give you all the secret sauce recipes you possibly could handle. And I think to exemplify that point, I already have 6 other organizations that have done this. They've signed, they've been writing business from South Carolina to Massachusetts to Florida to Maine. I just signed up another one in Missouri and Iowa, and I've got 6 other calls coming up. Okay. I believe that we're providing a very valuable service for clients. I believe that you should be seen by your clients as providing a valuable service. On the other hand, we have to provide a valuable service. So I like to be upfront, but if people think that's hard-nosed, hey, that's why I was in the Marine Corps, I guess.
That one thing I love about you, Paul, is you always shoot straight. And as my friends know, lawyer by education, and contracts as good as any, my friend. I've seen you in action. And the other thing I want to mention is, as a partner too, working with your firm and the team, I've seen firsthand how Paul, as a professional partner, works, and how he works with the people around him, and I love it. And I don't bring these kind of interviews out every week. You guys know me. I don't just pump out content on a daily basis. I know people tell me I should, but I'm very particular about who I interview and what I share, what products and services that I either take advantage of or I promote, or something that I believe in. So I really encourage you, if you're in this industry and you're even thinking about it, take Paul's meeting. I know he's going to deliver everything that he says he's going to do. And again, he puts it in writing. So I'll say thank you, Paul, for your friendship. Thank you for taking the time to share with my friends, my database, and the people whether it be BAN, UBA, or independent brokers around the country that might be interested in this. I think it's of value, and that's why I wanted to bring it to them. So thank you very much.
No, thank you, Mike. I mean, honestly, I know we tease each other quite a bit, especially since you're in sunny weather and I'm in snow up to my kneecaps here. But, what you've done for us in Clark and Lavey has been invaluable. I mean, for those that don't know, Mike has been involved with each of my team members, from senior management to the receptionist, and the training and the things that you've brought to the table for us to look at things in a different way, and how we communicate and how we work with our clients has been invaluable to us. And I guess I can't give you a higher testimony than this, Mike. You're the only person, outside partner, vendor, whatever you want to call it, because there's a little bit of both, that we've ever let come into management retreat. And you've been there the past number of years and an active participant, and it's been invaluable to us. So even though you live in Phoenix where it's hot and sunny, we still love you.
I appreciate it, my man. I appreciate the time. And this will be going around on all my database, LinkedIn. So if you want to share it around, feel free. We'll have the information in title and script that'll accompany the video in due time. So we really appreciate you taking the time to watch this, and feel free to pass along to other friends. Thank you so much, Paul.
Hey, Mike, just for people that do have questions, my email is pclark, C-L-A-R-K, @clarklavey.com. Our phone number is 603-883-3773. My direct extension is 103. Now, Mike, you have my information, so if someone does want it, but I have no problem sending out that material. And again, thank you to you and everything you've done for us. And for any of those interested, love to talk to you. Let's take a half an hour, see what the possibilities are.
I love it. I love it, man. Well, stay warm out there, brother.
Yeah.
All right. Take care.
Thanks, Mikey.
All right.
Bye-bye.